All right, good afternoon, then, everyone. As we're at the beginning of another week of trading on Monday, the 7th of October, we'll have a look across markets, see what's on the agenda for this week. I don't really anticipate the economic calendar having too much of an impact across things this week. Obviously, we had NFP last Friday that drove a bit of US dollar strength, and yeah, you'd have to imagine that's probably set to continue as we head into this week. I think markets kind of got a bit of the head of themselves with pricing for interest rate cuts through to year end, and then we got the 50 basis point at the last meeting, which I'm not so sure was really needed personally. No, the economic data didn't really suggest that it was needed. It's just kind of what markets priced, and the Fed kind of went with market pricing rather than kind of throwing the markets a bit of a curveball, I think. But we do have inflation this week out of the US. Um, Obviously, inflation is a pretty big print. I can imagine once you get around to Thursday, some of the news sources will be talking about it as it is as if it was some sort of key interest rate, a key economic data, the most important inflation print of history, normally, as they usually do. NFP super strong last week. Kind of, as I said, kind of got pricing for the next meeting, 88%. Market pricing for the November meeting for the Fed, 88% of a 25 basis point cut. I think the interesting thing is, though, some market participants clearly thinking that there's a possibility of no cut in November. There's 0% chance of that a week ago. Now there's a 12% chance of it today. So some market participants thinking that we may not even get a cut in November. I mean, it probably would have been more prudent to do 25, 25, 25 and in that kind of method. But ultimately, the central bankers and the people at the Fed thought a 50 basis point was necessary. Well, whether they did or didn't, I think they kind of just went with market pricing, as I said, and markets kind of told the Fed what to do, which is probably not how it should work, but it kind of is how it works sometimes with the Fed. So, anyways, 88% chance of one cut being 25 basis points, 12% chance these days of no cut. And I think if you get this inflation print, if that comes in hot, that definitely will increase the chances of no cut through to November. So it'll be interesting to see how that will be. The economic data over the last month or two hasn't been too bad out of the US. So we'll see how that pans out. Comes around a little bit later on in the week, but I think either or, if it comes in lower, I don't think it impacts markets too much. If it comes in slightly higher, I don't think it impacts markets too much. I still think you get that 25 basis points in November. There's obviously, as I said, about 12% chance of no cut, but I'm pretty sure that makes a difference really at this point in time. But we'll see how inflation pans out on Thursday. We do get the minutes out on Wednesday, so we'll get to see what market participants thought of interest rate cuts when we do get the minutes. Did they unanimously agree, or what sort of participants, what sort of members of the Fed thought what as we got that cut? Did they feel it was necessary? Did they kind of look at market pricing? Or was there a bit of a hung jury in that case? So we'll have a look at that when it comes around to it. We do have the RBNZ out Wednesday morning due to cut interest rates by 50 basis points. So we'll look for some further rhetoric on what to expect going forward. Maybe some weakness for the Kiwi dollar this week. But apart from that, nothing today. Nothing really of note tomorrow. Nothing really of note Wednesday other than the RBNZ. Thursday is obviously inflation. Friday, some employment figures out of Canada, which we'll have a look at when we get around to it. PPI, we'll have a look at PPI once we're through CPI, but again, not too busy on the economic calendar this week, and that brings us on to the markets from last week. You can see a substantial upside across the board for the US dollar. You can see your Aussie, Kiwi, Euro, and Sterling all trending lower last week. Dollar Swiss, dollar CAD, dollar yen all trending higher last week. Equity markets don't know what they want to do. A little bit down, a little bit back up, and just kind of choppy. They have been really choppy since kind of 19th of September. So coming up close to a month, another week or so, we'll have a month through, a bit longer than a week, maybe a couple of weeks until we get through to the 19th of September. So definitely about 3 weeks. We've kind of been chopping sideways, not really doing too much, and yeah, that's kind of where stock indexes are at the moment. Bond yields continue to move higher in today's session so far. A bit of repricing of interest rates, but certainly the higher yields go, the more positive it is for the US dollar. Gold's a bit all over the place, doesn't know what it wants to do. Oil continues to trend higher. Tensions in the Middle East, rising tensions in the Middle East, some attacks on Iranian oil refineries. some sanctions on Iranian oil refineries, with further retaliation towards Israel in the situation out in the Middle East, likely to keep oil prices supported. So I'd imagine oil prices continue to be supported this week. Bond yields continue their move higher today. Any hot economic data later on in the week will continue that move higher and will continue to be supportive for the US dollar. So trend is quite clear across currencies at the moment. The US dollar is trending higher. Still think that's the way you got to continue to look at things. I think cable probably still has more to come off. I mean, we were bullish cable for a couple of months really, but then you had Andrew Bailey last week suggesting that we will actually get a cut from the Bank of England through to year end, probably at the next meeting. So some repricing probably continues to have to happen. Markets are kind of universally agreed we won't get an interest rate cut from the Bank of England through the year end, and now the governor has come out and suggested otherwise. So we'll keep an eye on that. Any potential further downside on sterling. Economic data across Europe continues to be negative, so I think trades of choice, certainly from the dollar block or euro dollar and cable short at this point in time. Kiwi, they're going to cut interest rates. Heavy downside last week, should I say. That is probably said to continue. I think euro and sterling are good options to the downside. Dollar yen, Japanese seem reluctant to hike interest rates again. The yield differential is still there, and as long as yields continue to rise, dollar yen will continue to rise. And any strong economic data from the US kind of pushes back interest rate cuts a little bit further. So euro dollar, cable, dollar yen, for me, probably the main focuses of attention this week. Oil prices likely to continue to be supported this week. And bond yields, I think all eyes got to be on bond yields. Do they continue their move higher? It'll be an interesting one through to year end. Definitely through the course of this week. So yeah, bond yields main focus, US dollar and oil. I think these equity markets probably want to stay away from throughout the duration of this week. But we'll comment more on the economic data as it unfolds throughout the week. Best of luck out there, folks. We'll update further throughout the week.